guys, what's up? Welcome to another episode with me, Shashank Udupa. And in today's episode, I'm going to talk to you about mutual funds. I'm going to talk to you about how to invest in mutual funds that are not India, US based mutual funds, because a lot of people have been asking me about this. And I have been tracking one mutual fund house for a very long period of time. I've done multiple videos on them as well. And today I'm going to talk to you about one new NFO that has come out as well. So I'm going to talk about all of these things in today's video. Now, first thing that we need to understand from investing in mutual funds. First of all, I'm already doing videos about how to invest in direct stocks in US. But let's understand the antithesis of why direct investing versus mutual fund investing has a difference, right? Now, for all the people who like direct investing, it's great. But I know a lot of people don't have the time to sit and track what is happening with a particular stock. They also have to start learning up about how the US accounting system works, how they formulate their bonuses, their stock splits, and keep a track of the entire company. That's also a big problem. You don't know how foreign funds work as well, and there are so many different funds in India that we get confused. Imagine the number of funds that are there in US. So basically, investing in direct equity is great if you have the time, effort, and energy to do it. But if you don't want to do that and you want to just invest in, in autopilot mode, you invest in mutual funds. Now, the same concept applies in India. The same concept applies in US. But now the question is, why invest in US, and why am I also investing in US this year, right? Couple of reasons why. One is because if you look at it's always good to be deleveraged and have diversification in both US and India, because what happens is US market is great, it is growing over a long period of time, and with the US Fed now hiking the rates, it looks like it will start doing really well in the future. Other thing is there's a low correlation as well, because if I'm hedged in the US market and I'm hedged in the Indian market, it is better for me on both sides, right? Because I'm here also, if this grows, I'm great, but if something goes wrong, I'm also there in the US stock market. Another advantage of this is the US dollar appreciation, right? Now, if you look at the US dollar, it keeps appreciating and the INR keeps depreciating. So if I do US dollar investments, and today if it's INR is trading at 74 to 75, tomorrow it might trade at 80, then automatically my US investments have gained a few percentage points as well. So all of these things are very important when you try to understand why US investing is important. And US investing has its own benefits, right? Now, coming to mutual funds, as I said, direct equity investing is also great, but if you don't have the time and you want to just keep it on autopilot and invest in a few mutual funds, it would be great to do that as well. Now, I have been tracking a mutual fund house for a very long period of time, mainly because their expense ratio is low. And why do I say expense ratio is important? Because I keep tracking the expense ratio, because if you invest in something, right, assume you invest in any mutual fund, there's a small amount of fees that they charge for you, which is known as expense ratio. So it is very important to understand, if the expense ratio is low, then you gain a little bit more on it, right? So I don't want to pay so much expense ratio for anything, so I keep tracking on that. So basically, let me show you, right? So there's a new NFO. What is an NFO? It is a new fund offering. So there is a new NFO that is coming out right now. I don't know how many of you all know what Vanguard is. Vanguard is a very big fund in the US. Okay, so Vanguard in the US is known for its low cost passive fund management. What is passive fund management? There are two types of funds: passive fund and active fund. Active fund is where a fund manager is actively managing your mutual fund, hence the ratio, which is the expense ratio, is slightly higher. Whereas if you look at a passive fund, the fund manager is not actively managing your funds, hence his costs are less. So that means it becomes a passive fund management, right? Now the expense ratio is lower. If the expense ratio is lower, then the chances of you getting slightly higher returns is better. I'm not talking about returns as in absolute returns, but you spend less on a particular amount of fund, right? Now, if you look at Vanguard, what is Vanguard? Vanguard basically is the first AMC that was introduced index funds in 1976, and today they are the second largest AMC in the world. Okay, so basically they have this new Vanguard Total Stock Market ETF, VTI it is called. I made a note, so I'm trying to read from that so that I don't screw up. Right now, basically this ETF has different application, and it covers almost 100% of the stock market, and also has a very low tracking error. Now tracking error again is very important when it comes to ETF. Lower the better. So what does this VTI do, or which is the Vanguard Total Stock Market ETF? It basically tracks all the emerging companies that are in US that are not a part of the S&P 500 and or the Nasdaq 100 index. So that means these are small companies or mid companies, sometimes even mega companies, basically, that are trying to grow and emerge as a very good thing, right? Now VTI also has outperformed the S&P 500 index by 2.5% in 2020 due to its early inclusion of Tesla. And obviously Tesla, we know, kept going up a lot, right? Now VTI is the third largest ETF also in the world, and it is a single fund which basically has $1.4 trillion worth of assets, covering 10% of all assets in the US stock market, which is US stock market in the mutual fund and ETF category. So this is happening right now, and Vanguard is a very big company. I don't know how many of you have heard about Vanguard, but Vanguard is very big. Now, how many of you have heard of Navi? I have spoken about it in my previous videos. So Navi is basically a fund that is backed by Sachin Bansal, Navi Technologies, and Sachin Bansal is the co-founded Flipkart before. He left Flipkart. After that, he started his own financial services wing, where he started putting out products with respect to personal loans, with respect to home loans. You might have seen health insurance coming up, mutual fund houses coming up. So Navi is a part of that, right? Now, and it focuses very similar to what VTI is doing. It focuses on the passive style of investing, number one. Now let's look at what is this new NFO that has come in the market. So let me just screen share. Right. So the new NFO in the market is called Navi US Total Stock Market Fund of Fund. Okay, it is an FOF, Fund of Fund, very similar. I think it is open right now. Yes, it is open till 18th February. Now let's do some more research about this before looking at investment purposes, right? So if I had to read more about this, first of all, why Navi? Navi has this advantage of being a low cost driver because of their passive management approach. So they are slightly on the low cost end, which obviously helps us. Let me just do learn more, right? So Navi US total market fund of fund basically invests in the Vanguard total stock market ETF that I spoke to you about right now. And VTI basically tracks the performance of CRSP US total market index, which has 4,000 plus constituents across different caps, right? Small, medium market caps, representing nearly 100% of the US investable equity market. So this is why that is important. Starts on 4th Feb and it closes on 18th Feb. I think I've started this video late, but again I tracked this and it looks interesting. Right now, what is so special? Basically, it's again a low cost passive fund. This is something I spoke about, that the total expense ratio is quite low, and I think the total expense ratio is somewhere around 0.06%, right? So 0.06% is the total expense ratio, but it is not permanent. It is also subject to change, so sometimes it might change from time to time, but you should be aware of it and you should keeping an eye on it as well. So you can get all the information here with respect to the total fund, which is the total stock market fund of fund US, and why you should invest in the US, because you want to have exposure in the US market. The CRSP US total stock market represents the 100% of the entire equity investable market of that, and you want to capture all the US companies that are growing and emerging as well. So basically you get international exposure, there's diversification, and yeah, 0.06 per annum, but also it is subject to market change, so please do your research as well. Now, coming to another thing, right? Looking at another thing, I also found some articles on this. So basically, if you look at the top 25 constituents, this is an article on Live Mint that talks about the fund exposure. So the total market index is diversified, spread across large, mid, and small cap and micro cap companies, because it is important for us to know if you're investing, what you're investing into, right? So 72% is in large, mid is 22%, small cap is 6%, and other micro companies are 2%. And most popular name are the FANG companies, right? Currently, Facebook is having an issue, but total most of it is from the FANG companies itself, right? And the market Vanguard total stock market ETF, basically, if you look at that 1 year, 3 year, 5 year, 10 year returns from the fund, have been 25%, 25%, 17%, and 16%. Not bad. Not bad at all, right? So this is all there, I think, for you guys on public knowledge. And yeah, so where can you invest in this if you're looking to invest? I think they're on almost all platforms. Yeah, I think they're all almost all platforms. And if you check Zerodha, which is something that I keep using, right, which is coin. So this is where you come. Obviously, you can go to AMCs and check all the different types of AMCs that are there. You can find Navi over here, and you can check out all the other funds that are with Navi. But if you want to check out the NFO, then you go here, right, which is the Navi US Total Market Fund of Fund. I think the investment amount is 500. Minimum investment amount is approximately 500. Cool. Awesome. So this is how you do it. You can obviously go here, check it out by yourself. By the way, there's another very interesting thing to look at is the SEBI rules. So recently, I mean, if you looked at the limits, there is some topic or debate on the limits, right? So SEBI basically advised all mutual funds to stop investing in international stocks. Now, why did SEBI do this, right? Let's understand this. Basically, the SEBI has had advised all the mutual funds from investing in overseas securities, and they told them to stop. This came out in a circular in June 3rd, 2021. Why did this happen? Because mutual funds basically can make overseas investment up to $1 billion per mutual fund. But basically what happened, the overall industry limit of 7 billion was there, which got breached. Okay, so basically the suspension was a temporary suspension and it will likely be revoked very soon, but this is for mutual funds doing an investment overseas. Similarly, there's another limit, okay, and this limit is for ETFs. Now this has not been breached yet, whereas $300 million per individual mutual fund house is there for investment purposes for ETFs, and 1 billion at an industry level, and this has not been breached yet. So this is basically the whole purpose and the whole idea of understanding what the industry also looks like. So it is very interesting to understand the industry perspective here as well. Coming back, yeah, so basically this was a small brief about investing in US funds or investing in US stock market, but from a passive low cost investment perspective, so that you don't have to spend a lot with respect to expense ratio. So a couple of things that you need to understand. Obviously US investing is good. If you're focusing on direct investing, you have to keep track of all the stocks. If you're not focusing on direct investing, it's better to go into an ETF or a low cost fund, because then your expense ratio goes down, and obviously it is basically reflecting the market. So by the way, just to give you a disclaimer, mutual funds are basically subject to market risk. I hope you have seen this disclaimer, so I'll just tell it once more. Mutual funds are subject to market risk, and you have to read all the scheme related documents carefully, which is the SID document, which is also found on their website. Let me just show you where that can be found as well, so that it is very clear, right? So whenever you want to go read about the scheme related document, you can do that as well. Let me just show you. One sec, learn more. Okay, you keep going down. You can see the allocation here. Okay, you can see the allocation. Look at the risk profile. The risk profile is very high. Riskometer is there always. And you can click on the scheme related document. This is the scheme information document, which shows the risk which is associated with it, shows the name of the sponsor, shows the name of the mutual fund, shows the name of the AMC, which is Navi. So it shows everything, and you can go inside and do your own research as well. So it is always important to read the scheme related documents carefully. You should also look at the fund manager and his experience that is there with respect to the NFO as well. Cool. And more information, you can just come here and read it from their own website. Awesome. So again, guys, putting out the disclaimer again, mutual funds are subject to market risk. Please read the offer document carefully before investing. This was a quick video about investing in US stock markets from with an advantage perspective, right? Advantage means low cost investing. That is what I prefer. So if you want to have an exposure, you can do that by investing in an NFO. And when you invest in an NFO, you please do your own research, because there's a scheme information document which you can go through and which you can read as well. Awesome. Anything else? Let me know in the comments below. I'll put all the links below as well, so don't worry about that. This is me, Shashank Udupa, signing off. Take care. Bye. See you guys.
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.